Gold prices are slightly lower as investors are anticipating Fed minutes, and Wednesday afternoon here to talk about it with me, as always, is Mike McGlone. Mike, thanks so much for being here.
Joe, thanks for having me.
So Mike, when you look at today's trade, it does seem like most people are on the sidelines waiting to see if there's any hints of possible slowing of the pace of tapering.
I doubt if that's going to happen. I
Okay.
think the Fed's on a mission. When they start a mission, certainly one like this, there's no reason really to stop the tapering. The only key reason would be inflation continuing to not perk up. I mean, I guess you could say we have disinflation. It's not increasing. That could be a change. So I don't think we should expect from the minutes much from the minutes. But the key thing about gold, I think, is the more tactical, shorter-term traders will be likely and should be booking profits here. We got it finally popped up above the 200-day moving average, first time since February. And the people who bought near 1,200, which is a really good support level, the market was extremely oversold. At these levels, they should be lightening up.
Yeah, so I'm wondering then, what has to happen from central banks to sink gold prices? I mean, the end of quantitative easing as we know it is in the near future, hasn't sunk gold. What are we looking for here?
Well, to sink gold, technically, you would think that aggressive tightening like Paul Volcker did in the 80s, that would probably hurt the gold price. But we did some research on this recently, a little while ago. And historically, tightening has coincided with increase in gold prices. Let's give you an example. The last time the Fed started a tightening cycle was June 30th of 2004. Gold was around $400 an ounce. They ended that cycle on June 30th, 2006, and gold went up to about $600 an ounce. So it increased about 50%. So
why did it do that?
Well, it was part of this cycle, and I think it was because the market was looking ahead. They saw the Fed was way far behind with the tightening cycle. I think a lot of people saw the housing market start to turn over, and they saw a little inflation picking up. And as far as why, well, also we've seen this massive amount of global demand. It's really has accelerated the last year.
All right, Mike McGlone, a little bit of interesting information there. Hopefully people can use it on their trades. Thanks so much.
Thanks for having me, Joe.
That's Mike McGlone of ETF Securities for TheStreet. I'm Joe Deaux.